Alright, Advanced Gap Course, Chapter 5, Supply and Demand with Gaps. This is, we talked about this a little bit in the beginning. This I'm kind of going to go into a little more about why the concept of supply and demand and what it really means to us as gap traders, okay? So if you get this core concept down, this will really be fuel behind your setups as you day trade gaps, and understanding what's really going on behind the scenes under an X-ray. We talked about candlesticks, but kind of more of the concept behind the candlestick and the supply and demand. So supply and demand are our core foundations of gap edge trading. And once you understand this concept, you will incorporate it into every setup that you trade. Basically, this basic supply and demand is basic economics. Supply and demand. Let's build our trading setups upon the core concept and keep it simple. Suppliers or supply means sellers, and when a stock has more supply or sellers than demand, buyers, the price moves downward until it meets a solid demand area. And just the opposite, demand means buyers. When a stock has more demand, buyers, than supply, i.e. sellers, price action moves upward until it meets a solid supply area. These core concepts will be the fuel behind your day trading in gaps. Supply and demand with the gap. Now that we understand the supply as a seller and demand as a buyer, how do we incorporate it into gap trading? Well, the gap in alignment with supply and demand creates an edge. Once a stock gaps to a degree that it changes the supply and demand, this on S creates an edge for you. It's important to understand this concept. Otherwise, you're just an average trader fighting the tape. What I mean is that when you have a gap, like hypothetically say, a gap up, and it's changed the course of the trend of the stock, and it was normally an uptrending stock, now it's gapping down or gapping up. This is where it gives you an edge, because you're looking for the trap trader. You're looking for the trader that's trapped, the hedge fund trader that's got millions of dollars invested, the guy that's got his whole retirement invested in this stock. This is what gives you an edge. So the gap must change the previous supply and demand of a stock to give you an edge in a trade, because it creates a shock. You're trading the shock. You're trading the oversupply of demand. You're trading the oversupply of supply, right? So a gap up oversupply area creates a bullish trade when you want to buy in a demand area, and a gap down under a demand area creates a bearish trade when you want to sell into a supply area. Okay? Remember, supply sellers, demand buyers. What was the previous trend? How has the gap affected the previous trend? Has it changed it from demand to supply, or from supply to demand? So remember, as you look at a trade and you see supply, I want you to develop your mind to see supply as an area on the chart, as a stack of sell orders sitting out there in the market. People are looking to sell, they're losing, they're in pain. Or in the opposite spectrum, likewise, develop your mind to see demand as an area on the chart as a stack of buy orders sitting out in the market. Remember, demand buyers, supply sellers. I know it sounds basic, but it really will help your thinking out when it comes to trading. So there's 4 types of supply and demand and gap ups and gap downs. In previous course we talked about, there's many more, but I'm trying to keep it simple, more advanced, and just kind of take away more of the mechanics and make it more setups focused upon supply and demand with the gap. So we focus on pivot breaks, trendline breaks, base break, and range break of a gap. Okay? These are the 4 that we look for in supply and demand areas of the gap up and gap down. So, here we got a pivot break. So this is Twitter. We're looking at Twitter, pretty popular stock, traded a lot of times. It likes to gap. It's very nice, get good volume. Stock was previously sold into previous pivots. So you see the previous pivots below 19. Okay? So stock previously identified that those are supply areas, right? So those we've identified as previous supply areas. Now we see that we come in the morning, we see the stock is gapping up above 19. So we know the stock is gapping up over those previous pivot points. So we would classify this as a pivot break gap up. Stock was previously sold into those pivots, couldn't make it over 19. Now an event has occurred that's changing the previous price action. And this is thus giving us an edge. And this gap up is forcing out the shorts that are out, that will short this stock, below 19. And so this gap up creates an event that gives you an edge because you know you want to be long. Okay, so gap over pivot changes the previous trend of supply that was below 19. Now the stock's above 19, so the stock is telling you to get long. Okay, now we have a trend line break. Trend line break, gap up. So we see a stock, this CGNX was just in that, it was in a downtrend. All right. Now the stock's gapping above the trend line, and thus forcing everyone that was short this trade to get long and cover. And you have an opportunity to now, from supply, it's changed from supply now to demand. You find a long entry, 15, 30, 60 minute chart. Now we have a base break gap. Base break gap up. So we see the stock's been basing below 37 for quite a period of time. Now the stock gaps over the base of supply, because we call that base of supply zone. It hasn't ever gone over that area for a while. Once it gets over it, it goes up quite a ways. Look at 37, and it opens at 43 or 42 and change. Some people would think, well, that's too extended. Well, no, it's not. You have an event that just occurred with a gap up that's changed the stock from supply mode to demand mode. That means you want to get long. Now we have base break gap up also here. The base is fuel for the gap up. Gaps up over the area from $9 and moves all the way into 10 plus in the trading day. This creates a huge opportunity for you in this low price stock to make potentially over $1 on the trade. The base is the fuel for the gap up. So it was normally a sell zone or a consolidation zone. Now has become a demand zone for higher prices. So this range gap, right? So it hasn't gapped up too much, but it gapped up over the previous day, potentially pushing up into 149, 150. So this is an earnings gap up inside of a range. And these stocks don't do the most of their work. The range ones don't do most of the work in the pre and post market. They do most of the work during the trading day. So these ones can become enormous moves because they just gapped a little bit at the open, or a little bit down, a little bit up. So these can become the biggest money makers, the range gaps. So you can see it was an enormous move up. Honeywell, the gap pushed through supply and created a humongous opportunity to get long this stock. So most people think, oh, there's supply to the left. But no, you're missing what's going on here, because this stock is forcing out all the shorts, and you're trading the momentum of the gap up in the enormous amount of move that the stock was in supply. Now it's being taken over to demand, and it's changed the stock from supply mode to demand mode. Okay, now here we got a pivot break gap down. So when a move is built by a pivot, it creates a demand point into that pivot. So we see that the stock made a nice turn at 89.90 before the gap. And there's a lot of people packed in here on the long side, anticipating higher prices. So you're trading the event. But once a pivot is broken on a gap down, the stock will gravitate to the prior pivot of demand, which is $80. So you see the highlighted areas, the pivot area at 88.90. Once that's broken, the next area of demand is the previous price support level at 80.65. Demand shifted from 88.90 to 80.65. That's almost a $9 move. Pay attention to what's going on when the stock gaps. Is it switching from supply to demand, or from demand to supply, that you can capitalize and create your edge in trading? Alright, here's another pivot break gap down. We can see that the stock broke the 45.90 area, and the next area of support to the left that we talked about in supply and demand chapter shows us that this would be our target if we got short. Alright, now we're going to go over these setups more detailed in the 15, 36 minute charts, but I'm kind of laying a foundation on the bigger time frame here of what's occurring. So once a pivot is broken on a gap down, the stock will gravitate to the prior price pivot of demand. So now demand is shifted from demand to supply. The stock is being overtaken with sellers because of the gap. Alright, here's a trend line break gap down. Okay, so once a stock gaps and trades below its demand level, it's in hunt for a new price level of support. Knowing this creates an edge, a bias to wanting to find a short setup to take part of this action of movement. So this is a beautiful setup. The stock was in the trend line up. It broke the trend line on the gap down. Now it shifts from demand into supply. And here's the base break gap down. The stock was consolidating in a base sideward action. Potentially a lot of people in there anticipating higher prices on Starbucks. Once the stock moves below its previous base of support, it will move into price hunt for previous demand. This creates the stock being in supply mode. So you can see that it sold off on the gap down from $55 all the way down to $47. So it's a big move down. A lot of people got hurt on that trade on the long side. Here's a range gap down. Stock gaps within a range, not breaking a pivot intraday, but breaks a demand point. Now typically you will know these in action because of a lot of volume in the pre-market. So the gap within the demand, but broke the pivot intraday. So on Alcoa, AA, it had earnings, and it gapped down to 46, which was still breaking below in the last 2 weeks of trading. Then it pressed through. Ideally, you'd probably look for a target at 43, but you could trail it, and you would have gotten down to 40.50. So this is a nice, again, the transitions occurred, gap down, and a transition from demand to supply. So the three things that are needed. So we're going to go over the 3 things that are needed for, I would call them filters for what you want for a gap. Number 1. News-driven event. And I didn't used to pay attention to news-driven events. I would never read the news, but now I read the news, and it builds a confidence when I'm reading the news because I know how the reaction is going to be. So news positive, news negative, know the news, read the news, find out why the stock's gapping. Number 2, volume to back the news. If there's news and there's no volume, there's no trade. If there's news and there's volume, breakout volume, above average volume, this gives you a huge edge. And number 3, we talked about the gap over supply or under demand. This gives you a huge edge. These are the 3 things needed: news, volume, and supply and demand with the gap. Okay? Here's an event showing you with the 3 parameters we just talked about: news, volume, and gap. Okay, so the stock gapped down on earnings, right? So, and then number 2, look at the volume. So normally it does 3.2 million shares, and the day it gapped, it did over 18 million. And then 3, it gapped inside the range, but broke the range, so thus giving you a massive edge into trading this gap. You want to be part of this opportunity. Now the amazing thing about the gaps is they stand out. The volume, the news, everything's there for you. They're not hard to find. They're very easy to find. You can see the gap down within the range. See how it broke the level. Now here's another example. Had new earnings was the news. It broke below the pivot. The volume was there 7 times more than the average daily volume, and it gapped on the pivot, the event. Boom, into the demand level. Here's another one, Red Hat on earnings. So once Red Hat broke the trend line, it would finally be in hunt for the next price level of support and demand. Price demand before the gap was 165. After breaking the gap was 145 and down to 130. That's a humongous price change. That's putting a lot of people in the vice. So remember, earnings, and look at the volume, is 7 times more than the average daily volume on the gap down day. That shows you a huge event. Boom, trend line broken on the gap down. And And here's another one on Kors, Michael Kors. Trap traders, trap shorts that are in this trade, and smart traders feel they're forced out of this trade on the gap down. I mean the gap up, excuse me. So what we look for is we look for the news, and then look at this stock traded 14 million shares. It traded 5 times the normal average. It's a huge. There's a lot of people in here. So you normally does 2.9 million shares. It did over 14 million shares, and then it gapped over supply. Again, news, volume, and the event with the gap. Okay, so we're going to go on to chapter 6 now, and that was chapter 5. Let's get this started, the advanced course.